Thank you for joining us at XM.com for this Forex Preview video. We'll be discussing the policy meeting by the Swiss National Bank scheduled this Thursday. I'm Cristina Marujos, and joining me today is investment analyst Cristina Parthenidu. Now, it's said that the Swiss Central Bank will be following the European Central Bank regarding its monetary strategy. Do you think it could keep interest rates steady this week, as the ECB did earlier this month?
Indeed, Christina, the SNB is closely watching the steps other central banks are taking, and especially the European Central Bank, given that Swiss exports are mainly dependent on EU purchases. One of the main reasons is that the country has a currency that tends to appreciate when global risks are rising, and that makes Swiss exports less attractive to international markets. So when other central banks are cutting interest rates in fears of a financial negative shock triggered by global economic threats, such as the coronavirus at the moment, then the SNB is facing pressure to act in the same way in order to reduce buying interest for the Swissy. This time, however, the ECB didn't change interest rates, but widened its asset purchase program in order to boost liquidity in the EU, and that takes some pressure off the SNB to reduce its own rates. Of course, the declining spread between the Swiss and German 10-year government bond yields is pressuring for lower interest rates, but looking at the SNB's side deposits, the amount has sharply increased this month, suggesting that the central bank is intervening in exchange markets by selling francs in exchange of euros, which is a signal that the central bank has already chosen a different method to stabilize the Swissy, something it has done several times in previous years as well. Besides, since the current record low interest rates that has been holding since 2015 did little to push inflation towards the central bank's 2% target, I don't think that another 25 basis points cut could make any difference. So this option may not be favorable at this week's policy meeting, unless the SNB judges that its FX intervention in the next months may not be enough to discourage traders from buying the Swissy.
Well, probably this is also a reason why the Swissy is quite muted against the euro recently, despite the virus crisis. Now, do you think it could keep up that pace after the SNB meeting tomorrow?
Well, more likely, euro franc has dropped below the 1.06 level, which in previous years forced the central bank to intervene in exchange markets. So I believe that the SNB will keep manipulating the currency and therefore keep restricting movements in the euro franc market, which makes other pairs more interesting to watch, such as the dollar franc. I know about how this pair could react if the SNB holds rates steady and announce other measures to boost liquidity in the real economy. It will likely face some downside, as markets are currently almost certain that a rate cut will be the case at this meeting. On the other hand, if the central bank judges that it's time to use its rate weapon now, leaving little room for stimulus in the future, then the pair may extend recovery.
I see. Christina, thank you for joining me today, and thank you for watching this Forex Preview video here at XM.com.